Welcome to the Quantum Leap Podcast. This is David Kersten, and we welcome a special guest today. Cheryl McCarthy comes to you from the mortgage industry. She's been in banking and finance for over 30 years in a variety of positions: private banking, management, mortgage lending, and commercial lending. In 2015, she left banking to offer FHA's insured home equity conversion mortgages, more commonly known as reverse mortgages, to homeowners 62 years and over, and jumbo arms exclusively with Mutual of Omaha. So we're excited to have her on to really talk about a key lifeline for homeowners during a tough time of COVID. And welcome, Cheryl. But before I get to Cheryl, let me just introduce my co-host, Cory Nott, a top business coach here in the city of Oakland.
Just launched a platform for entrepreneurs called Lift, and that's actually the sponsor of the broadcast. Him and his wife, Gail, launched a real innovative platform for freelancers and entrepreneurs. Cory, do you mind just introducing yourself and telling us a little bit about that platform that's bringing us the broadcast today?
Yeah, so my name is Cory Nott, and I am co-owner, along with my wife, of Take Wing Coaching. We do business coaching for purpose-driven freelancers and solo business owners. We have an online platform called Lift, where those business owners can get some networking, brainstorming, even some coaching, and of course, learning is a big part of that. This week, we are publishing our sales class for freelancers and solo business owners who want sales to be more enjoyable and more effective.
I know Erica and I were talking about being accountability partners to work through Lyft, and also be in some of the masterminds and Q&As. So we really look forward to that. And I think the more we can do for community these days, and inspiring each other in our entrepreneurial journeys, the better. And that's a big part of what this podcast is about too, helping build that community, hear from experts, and also sharing your expertise, Cory. Really a lifetime of knowledge in business development and coaching. So thanks for that. With that, I did want to get to Cheryl. Cheryl, wanted to just ask you how you are today, and then see if you could just briefly introduce yourself and your professional background.
Terrific. So I'm doing very well. It's a beautiful day. Spending a little bit more time inside than I wanted. My professional background, you've hit on it a little bit. I've been in banking and finance for years, over 30, and I held a number of positions in private banking, management, mortgage lending, and commercial lending. Then in 2015, I left banking to offer FHA's insured home equity conversion mortgage, which is more commonly known as a reverse mortgage, to homeowners 62 and older. And reverse mortgages are all I offer now. And I also offer jumbo reverse mortgages exclusively. And I work with Mutual of Omaha Mortgage, so that's terrific.
Great. We will put that in the links, and clarify, how folks can get a hold of you, and some about your background, as well as I do the accompanying write-up. And same for Lyft, in case you missed the contact there. So the $1 million question here that we like to ask commonly is, how are you adapting your professional life to the COVID-19 environment?
So I'm considered an essential worker. And so when COVID hit, my office became my home exclusively. And my client base is over 62. So I've had to adapt my level of service to meet with them where their needs. So I have some older clients that don't have access to PCs or smartphones, and I work with them via FedEx and US Mail and over the phone. I have customers that are tech savvy, which then we can Zoom and meet that way. I was even able to help a buyer purchase a new home during COVID when it first happened, helping him to furnish it even without access to a computer, that he didn't have access to a computer. So I can now meet my customers face to face, only we must meet outside with masks and maintaining social distancing.
Thank you. And I know I just had a visit with your sister Nancy McCarthy yesterday. She's also in the banking industry, and she says they even have business as normal, which was an interesting anecdote in some ways, in that you can still go into the bank. So it's, an interesting contrast depending on, what sector and what company you work for. So thanks for that. Have seen some articles recently, and I was going to put a link to one up I saw in the Wall Street Journal this week about mortgage rates hitting rock bottom. And we know there's also some interesting things going on in the housing market and the mortgage industry. Could you just talk a little bit about the emerging trends that you've seen in the mortgage and real estate industry since COVID-19 hit about 4 months ago?
Yeah, sure can. And you brought up banking. Banking is considered essential also. And so the banks in general, and this is small banks and big banks, are limiting access to the number of customers that can come into the bank at any one given time, because I think the state regulations is no more than 10 gathered and this kind of stuff. So it's very interesting operating in this environment. So when COVID first hit, everything real estate shut down. That meant loans and home buyers and home sellers. Then as people became more adept, it's starting to pick up again. You mentioned the Wall Street Journal article, which was very interesting. There's been some really big impacts. The rates are very, very low, and you would think that as a result, there would be all kinds of refinancing and purchasing going on. Unfortunately, what's happened is the inventory of homes for sale has dropped dramatically. Although it's increasing now, it's nowhere near pre-COVID levels. And realtors have a number of restrictions on showing properties, such as having to do appointments, cleaning before and after, all this other good stuff. As a result, it's now a seller's market. So the inventory is significantly less than 2019. It's down about 25%. So what that does is it's driving multiple offers and driving prices up. So sales prices are increasing in the counties of Alameda, Contra Costa, and San Jose, and significantly. And I think that's your Wall Street Journal article is something about 20%. San Francisco and San Mateo counties have had a decrease in home values, but they're still incredibly pricey. COVID has also affected the liquidity in the secondary market, and that's a mouthful. But what that means is that banks don't have the liquidity they had pre-COVID. So large banks have frozen the equity in their home equities and refinances. Several of them are not even accepting new applications. In addition, some of them are not offering jumbo loans, and jumbos are considered anything over $765,000. And some are accepting jumbo applications, but they have to have $1 million in liquid assets. And so 765, 500 for the rest of the country sounds like a lot of money. In the Bay Area, that's kind of the norm. If it goes over that, it's not unusual. So what's happened as a result, refinances, excluding reverse mortgages, have slowed considerably, even with rates being at historic lows. There are a lot more verification of incomes requirements, and as far as calling the employer right before funding, all that other good stuff. And appraisals are now becoming a huge issue. Appraisers are retiring. The turn times are really long. It's hard to get comps because there's not been as many sales. And FHA has restricted appraisals to exterior only. What that means for reverse mortgages is it's not a bad thing. They don't actually come into the house of the client. But if the interior of their house has significant upgrades that they want to have to take into consideration, there has to be some workaround that they can do.
Thanks for that. And I'm a economics guy, and getting into business development has made me really have even stronger interest in the real estate and mortgage industry. So I really appreciate your insights and also keeping in touch going forward. With that, I did want to turn it over to Cory Nott.
I guess I need to unmute myself. Apologize. Answer that question now, please. No.
I think.
So during these times, why would somebody want to consider a reverse mortgage?
So the primary reason is what I'm going to call pick a payment. If you're over 62 and it's your primary residence, you don't have to make a mortgage payment on a reverse mortgage. You can, and you can make as little or as much as you want at any time. There's no prepayment penalty. But what's happening is that there are so many people that have an unexpected income loss. They're retiring earlier. I've gotten 3 phone calls in the last month that people that weren't expecting to retire are now suddenly retiring much earlier than they planned. And a lot of them are unemployed, and as you age, it's more difficult to get a job, especially in the field that you're in, because they can hire younger and less pay. A lot of people have uncertain income stream, and this is certainly on the business owner piece. So if your income stream has been impacted by COVID, wouldn't it be great not to have to make a mortgage payment? Unlike the forward mortgage or the conventional mortgages, interest rates are at a record low. And so what that means for the reverse mortgage is that you're able to borrow more of the home's equity. And one of the last reasons is HECM for purchase, home equity conversion mortgage for purchase. One of the interesting things that came out of COVID is we're seeing a spike in divorce calls. So while sheltering in place with your hubby or your wife, California attorneys are seeing a significant spike in calls. And so a reverse mortgage for homeowners over 62 can allow 3 scenarios. Basically, you sell the primary residence and each buys a new home with a reverse mortgage and still not have a mortgage payment. Or one of the spouses stays in the home and buys out the other spouse with a reverse mortgage, who could then buy his own house or her own house. So we're seeing people downsize, right size, moving closer to their kids, moving out of the city, and a reverse mortgage for purchase is a great idea for that.
Thank you. And I know Cory had a question, but I just wanted to make a quick comment. And what really caught my eye about you and what you do during this time is that a lot of people may not be aware of this option, because when times like these strike, even if folks do have to get a divorce or they're having trouble with income, this is a great option to help get through this COVID and kind of be financially viable and stable. So I really think it's a great offering to look at these days, and you're also a great person to offer it. And I think also Mutual of Omaha too, with the insolvency, and a lot of banks are really cash poor right now. So them being funded, one of the best options as well.
I agree. And so one of the other things we saw with other reverse mortgage competitors is when COVID hit and we talked about the liquidity, they stopped offering the jumbo reverse mortgage. And we, because of our strength and our history, were able to continue to offer it, and still do to this day.
Thank you.
Yeah, I know I had another question here on the list, but one I kind of wanted to ask about, because I think it always really applies to reverse mortgages, and of course some of the history around that and so on. And what are some ways to kind of bring up the conversation with family members or friends or anyone we see struggling with that, to say, hey, reverse mortgage? And sometimes there's kind of a reaction to that, but we'd want to say, let's talk to Cheryl about it. What can, or somebody in their own circle, but
Right. I think let's talk to Cheryl about it. There's a couple of different ways, and to your point, Cory, reverse mortgages have been around for a long time, and they earned a very bad reputation prior to becoming a government insured loan in the late 80s. What happened in the late 80s is that FHA, Federal Housing Authority, now regulates these loans, and they put a lot of protections in place. So now it's a loan like any other. You can hold it, you pay it off at any time. So specific to the environment we're in today, if I'm working, if I know a family member that is a business owner or that is retiring or had some unexpected income loss, I would bring up that how I heard about this wonderful home equity conversion mortgage, and I have somebody that's an expert in it. And basically, it's not for everybody, but it's for pretty much all the customers I talk to. It's a viable option. It's hard to work in reverse mortgage into the conversation without somebody saying, no, 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 I don't want to hear it. But that's my job. As I talk to them quite a bit and just say, you know what, things have changed so much. I think it would really benefit you to hear about some of those changes.
And they can probably go to some of your links and so on and learn about some of those
Oh,
changes.
absolutely. That's a great point. Thank you. My webpage, it has frequently asked questions. It has calculators. It has a little bit about me. And so when they're there, they can run some numbers and they can see that some of the myths that they think that they know about reverse mortgages are in fact not true.
Great. So what are some of the trends that you see going forward in the mortgage industry?
So I see a number of different things, and talking to a bunch of other lenders, I see the rates right now, I don't see them increasing significantly. I think that we're in what will soon be a recession, if it's not already. I see a large exodus out of the city. It's already starting to happen because of dense population. People want to be, they don't have to be working in the city anymore. A lot of companies are going remotely. I'm seeing a lot of small businesses that built up around those companies in the city starting to close down. And I think the restaurant industry as a whole, it's going to be a whole new ballgame when this is over. A lot of suburban growth. And what we're seeing also is a demand for new home growth. So we're going to see a lot of construction going on. I think high unemployment is going to be in our future for a while. And I think housing inventory is going to remain low because sellers don't want to have somebody in their home. They're sheltering in place too, and then to get another home. And I also think that we're going to see a significant increase in divorces, not just in the over 62, but in general, you know, that's going to be a huge thing going forward.
Do you think it'll still be a seller's market, or is this going to be kind of
for the short term? For the short term, yes, absolutely. There is a lot more buyers now than sellers. We're starting to see that, you know, like 10 multiple offers, that kind of stuff on properties that are for sale. So, and that's driving the prices up. So right now, the ones that are secure in their income, secure in their jobs, they're looking for a home. They want to purchase.
They want to get out of that dense housing.
Yeah, and the other great thing is too that they don't have to stay in the cities, or they don't have to worry about a commute so much as they used to. Like even going to San Jose or going to the peninsula is 40 minutes, where it used to take an hour and a half, 2 hours. And, you know, and so it's going to reshape how we live.
Yeah.
I did want to touch on another kind of little known topic, and I think, you know, layman circles, so to speak, is the interesting product that you have around downsizing, you know, be it commercial property or residential property. And I know you gave a presentation at a symposium on Measure W. Could you talk a little bit about, you know, an option for, you know, how to downsize or those products regarding, you know, commercial real estate as well?
Sure. So the reverse mortgage is only for your primary residence. But what it does do is it allows you to access some of that equity in your home, right? So you can use that equity for any number of things. And with Measure W, we were talking about using the primary home's equity to fix up their rentals, to get it ready to sell, to purchase. You can use it to help your kids with a down payment, or even purchase a commercial building. Now, so with COVID, I don't know about purchasing commercial buildings right now, just because I don't know what that market's going to look like. I have some guesses, but I think that right now doing investment properties, it's probably not a great time to do that. Do you, so what do you think?
Yeah, I don't think they've hit rock bottom yet, but I know the savvy investors, there's always deals to be found. And, when hard times hit, sometimes people have to get out. So if nobody's buying, you can, snatch up some of those. And,
Yeah.
housing's always going to be in demand in the Bay Area, so I think
But then one of the things that we didn't talk about, and it's because I don't know enough about it, or is the rentals. So I can do a reverse mortgage on a 1-to-4 as long as the owner is living in one of those units. But Measure W is like rent units, and then there was the hiatus on evictions, and that just lifted. And so now I don't know what's going to happen. There are some really big numbers out there they're talking about, and this is nationwide, about people are going to be evicted. And so commercial or investment properties that are residential, that's a iffy proposition right now. I wouldn't jump into it.
Yeah, that's a point well taken. And for those who may not know, it's Measure W is a City of Oakland ordinance that went into effect July 1, which actually has a vacancy tax on properties that are commercial properties that are vacant. And correct me if I'm leaving something else out there. I didn't get that connection to the commercial market exactly right. So please.
Well, commercial is commercial is what we think, like strip malls and that kind of stuff, and it's for housing units 5 and over. So 1-to-4 is considered residential, and 5 and over are considered commercial or investment properties. So, with you having COVID going on, an eviction hiatus, and then you have a large portion of the population where their housing is insecure. I don't know. I think it's a very iffy subject. So I think you can use the proceeds to do anything. And to your point, David, when there's opportunities, the smart investors, if they have the money, they can snap up some properties. I think that's a great idea. But I also think that sometimes you use the reverse mortgage, for example, when the market was going crazy, and it had significant drops and went down to like Great Recession levels. People that are relying on pulling out of their investments for their income, if they had to take money out of their investments, they locked in a loss, a significant loss. If they had another asset to pull from, i.e. the reverse mortgage, they would be able to pull from their home's equity, give their stock portfolio a chance to recover, and then overall be in a better position.
Interesting. I do love discussing these topics. I know we're running short on time, but we do have another minute or two, or possibly 3. If Cory, did you have any closing thoughts, or any of the guests if you wanted to ask a question as well?
No, I'm good. Thank you, Cheryl.
Okay.
Thank you, Cory.
Okay, great. I'm not an expert in the commercial market by any means, and I really think with this economy that there could be another shoe to drop here, especially in that commercial market, and that with the restaurants, and there could be just a complete collapse in the commercial market. But we know the residential market is likely to stay strong, especially in the Bay Area. So we're still kind of waiting to see what that looks like. And I know most of your business is in residential, and that's what.
100% of my business is residential. I don't have anything to do with commercial anymore. And when I was in commercial banking, I did deal with a lot of investments and investment owners, and they would buy, a strip mall, and they would buy, an anchor store, and these kind of and they would have 5 units or 10 units. And now, when you think about it, if they have tenants that are not paying and can't pay, then they're going to have to go through this eviction process, and their income is at risk, and they have mortgages, and so it's just a cascading effect. I don't know what the end result will be.
Okay. Thanks, Cheryl. Well,
And on that light note,
yeah. On that note, we'll wrap up. And Cory, did you want to do the wrap up today?
I could let you do that.
Okay.
Chicken.
Any last comments on? Thank you so much, Cheryl, for coming on and sharing your insights. And we definitely will have you back at some point to get an update on these important trends and markets, and most importantly, these reverse mortgage solutions that are really a lifeline for a lot of homeowners out there with everything going on and the economy, but also the social fabric of society. So thanks for listening. I'm going to close out the Quantum Leap podcast with Cheryl McCarthy, and thanks to my co-host Cory Nott too.
Thank you. Thank you for having me. Thank you, Cheryl.
Thank you. Bye-bye now.